All right, good morning, everybody. Welcome to our webinar. My name is Kyle Schlegel, and I'm here with my partner, Craig Cady. We're here from ICJIA to present how to do your program income. The first thing to know is project income and program income are used interchangeably. So on the paperwork, it might say project income or program income. Those are all the same. Okay, so what we're going to be going over today is how to determine whether or not your program has any program income, how to calculate the amount of program income that you need to spend back into your program, and how that program income can be used in your program. And then lastly, Craig will go over how to fill out the paperwork in the more tedious aspects, but very important part of reporting quarterly and at the closeout of your program. So what is program or project income? It's the gross earnings generated by activities funded by our federal grant during the award period. Here's some examples for you. The most common form of income that you'll probably be dealing with is forfeiture or property seizures. Another could be any interest that you earn from an interest-bearing account on funds, any ticket sales to a conference that you might host, or fees for services that you provide, if you're providing some sort of mental health or any kind of service. Any of these other kinds that are less likely to be what you'll be dealing with, copyrights and patents, but any kind of income that your program has as a result of the funds that you're getting from ICJIA. Program income is not the regular fines that police might be giving or any kind of discount that you might receive on any cars or computers or whatever equipment or supplies you'll be buying. If you get some sort of a discount on that, that's not count as part of program income. So when it comes to the timing of when you receive your income, it's important to know that it's when you receive the money that the program income will come into play for our purposes. So for a forfeiture, it might take place in 2016, but it might take a year or 2 or 3 for the court to adjudicate that and to issue a check to you. So in this example, in 2016, the county police department receives a federal award that funded partly the electricity for the police department, and in the course of the program, a police officer might seize a $10,000 cash forfeiture. Then in 2017, the court issues a check to the police department. So those $10,000 are a part of project income for your reporting purposes in 2017, the year that you received the money, not when the activities that gave a rise to the money took place.
Your volume button, you got a volume?
So you're required to spend the program income back into your program at a rate equal to the amount that our funds funded your program. To explain what I mean, let's say that your program is 100% funded. Let's say that your grant is 100% funded by ICJIA. Then 100% of any program income that you receive must go back into your program following the guidelines of your agreement. So let's say that you have $300,000 funding your program and you only get $150,000 in grant funds. And you earn $1,000 in program income from one of the types of income that I discussed earlier. How much of that income needs to go back into your program? Well, 50%. So if you earned $1,000 and your program was 50% funded by ICJIA, then 50% of your program income must go back into your program. Another example. So this one's a little bit more complicated. Let's say you have a $500,000 budget, and $100,000 of your budget comes from ICJIA. The police department then gets their $10,000 of program income from whatever sources. How much of that needs to go back to the program? Well, it's proportional to the amount that we funded you. So $500,000, that's the total budget that you have for the program in total, and then $100,000, the grant that you're getting from us. So it's 1/5 of the program is being funded by the grant, 20%. You apply that 20% to the $10,000 of income that you received, and that's $2,000. The remaining $8,000 that do not follow our requirements for project income can be spent however you wish. It does not follow our rules. So how can you use the program income? It must be used for the allowable kinds of costs that further the goals and objectives of the program. That doesn't mean that you have to buy the same equipment that is in your budget. It simply means that you need to be achieving the same goals and objectives. So if you already have a computer from your program and you received an extra $1,000 that you need to spend back into your program, you don't need to repurchase what you already have, but you need to be achieving the goals and objectives that the program was intending to achieve. And of course, the time frame comes into play as well. You need to be spending it during the same period of the grant from which the money is coming in. So before your closeout of the program, if you receive project income during that year, before you close out, that needs to be spent back into the program. If it's not, then it needs to come back to us. Okay, do you have any questions about the first half of our presentation on sort of concepts? I'm going to open up our chat here. Sal, can we unmute our participants? Great. So I can hear you now. Do you have any questions at this point?
No.
No? Okay,
No.
Great. Well, I'm glad I was so successful in explaining that the first time around. I'm going to hand it off to Craig, who's going to go over some of the paperwork.
Yeah. Wonder where we're at.
Good morning. This is Craig. So now I'm going to be talking about the portion regarding the actual paperwork that needs to be filled out. Everybody here is somewhat familiar with. So as you know, the required to report the project or program income earned and expended on what we call the periodic financial report, or our PFR. And as you all are aware, that's submitted each quarter. There's 4 quarters, usually depending on the length of the grant, and then you have a final closeout report too. So program income earned and expended must be reported on a cumulative basis. For example, as we discussed earlier, if you had $5,000 in program income and earned in the first quarter, $10,000 was earned in the second quarter, You'd enter those amounts on the PFR in their appropriate quarters, and then the 15,000 earned would be automatically calculated as a cumulative total. Okay, and here, as everybody's probably seen by now, this is the new ICJIA periodic financial report for reporting project or program income. This is the front sheet. So now, as you all are aware with that front sheet, at the very bottom there are tabs, and each of those tabs correspond to a different portion of the PFR. The portion we're going to go over is, of course, for the income expended for program income. So for step 1, you would go to the tab that says income received and expended, and the form would pop up looking like this. Okay, for step 2, under income received, you would fill in the expenses by the most appropriate sourced income type for the correct quarter. So as you see, you would have forfeiture, fees, and other, and you would fill those out in each appropriate quarter as you submitted the quarter reports to us. In step 3, you would enter any of the program income expended in the appropriate quarters column. Obviously, if you didn't expend any program or project income during those quarters, you would leave it blank or put in a 0.
And right now, that's just utilities.
Yeah.
I have no idea how they calculate it.
Okay, and this is a sheet that some of the grantees in the past have had difficulty with. This form and this portion under the tab Program Income only needs to be filled out at closeout. It does not need to be submitted with each of the quarterly PFRs. This just goes with the 5th and final PFR as closeout. And as you see, it shows the total forfeiture money received, total fees and others, total project income. So let's zoom in on the portion that you'd fill out for program income. So as you see, enter your program's total income received over the course of the program in each of these categories. As I explained earlier, total forfeiture received, total fees and other income. And then your program income totals will appear here. They will automatically calculate. They will not, I'm told they will not automatically calculate, so the numbers need to be manually entered cumulatively. And down below that box, you'll see you'll have your enter the income that's been expended from project income in each of the categories. And then this portion here, I'll get in a little bit of detail, you'll have a summary of your program's total expenses. Now this portion is very important because as you see, well, first of all, match is no longer required, so you no longer need to report that. But under other, you want to make sure that your totals are everything that you are receiving as income for your program, spending for your program, your total spending. Because the higher you get that spending number up, the less it's going to require program income that you need to spend back in the program from our side, from the federal side. So if you get this as high as you can, there will be less money that will need to be either expended on our side that we were required for you to do. Therefore, you would have more program or project income left on your end to be able to use as you see fit. Okay, and lastly, of course, as with any of these forms, you'll want to, after you've checked your numbers, make sure you've entered your program income, project income correctly, have the person who's preparing it sign it, and then someone other than the preparer who's in the position of authority, signature authority, to sign off to certify that the form is correct. Okay, now I'm going to turn it over to Mr. Schlegel again.
Okay, so I'm just going to pull up an Excel spreadsheet with some samples filled in. So let's assume we've got our quarter 1 expenses, we can fill in here whatever we'd like. So I'm going to just put some other amounts in here. We'll assume that the personnel was the same every quarter. Okay, I'm just putting some numbers in there so we can deal with what we're really here for, the program income. So income received. Let's say that you received in your first quarter $3,000. This amount you know is going to be automatically tabulated. And let's say you got another $10,000 forfeiture in the second quarter. And then you got nothing in your third and nothing in your fourth. So here, we're going to be filling in the different kinds of forfeitures and fees for our total project income over here. So we'll go back to our income received and get our total, $13,000 for forfeitures. $13,000 and 0 for fees. Fees here for each quarter, the total is 0. And so the total, of course, will be these two combined. Now, for our other expenses separate from our project income, we were paying our staff, we were getting equipment, we were paying for travel to conferences, we had contractual expenses. We don't have any match, but that's not our entire program. The money that you're getting from ICJIA is to supplement, let's say, $900,000 of your department's personnel, $100,000 of equipment. These are going to be your total amount expended in your entire department or your entire agency involved with what ICJIA is partly funding. When I was explaining the formula for how program income needs to be spent back into the program, we're going to use this formula. So we've got our amounts here. I just made this little formula here. Our total expenses, that's going to be this amount right here. So that's a combination of expenses from grant funds, any matches that you had, and your total expenses from all other categories. We're basically building up the denominator of our formula here. So we have our project income divided by 1,712,500. Is that right? Okay. So we're dividing the amount of project income that we received by the total expenses, and this formula isn't complete. Oh, great. So we've got our total expenses here. We're going to divide that by 250,500 here. What happened with the square here? Oh, great. Okay. So we're going to divide these numbers here. Okay. So that's the proportion of income that we need to spend back, and we multiply that times the 13,000.
Yeah, they already told us how to do that right on the beginning pages. I already wrote it down.
Well, he made a thing on here, though.
So this proportion right here, $1,901.61, is representative of how much of your total expenses ICJIA funded, and applying that back to the proportion of project income that you need to spend back into the program. So that means that you have about $11,000 that you can do with as you wish, but this amount right here, this is the amount that ICJIA has some control over. This is the amount that we are interested in. This is the amount that needs to follow our agreement in spending this money back into the program to achieve the goals of your program. The remaining amount of the $13,000 is yours to spend however you wish. Okay. Now do you have any questions? I'm hoping that you do. If you guys want to speak, you can unmute yourself and we can hear you, or you can enter it into the chat. You get to the chat by just clicking on my name, and you can send a chat to me. Nobody? I see some people are unmuting themselves. Have you guys had to report project income before? And do you have questions on the paperwork or what the rules were for program income? At this point, I'm trying to make sure that people are still hearing me.
Well, I can hear you.
Okay, great.
Yeah, I can hear you.
Cool.
Yeah. All right. This is Natalie. Natalie from Dixon. I'm not the financial person. I'm the program person. So my question is, have the fiscal people been filling these forms out since we started this grant last October?
Which grant are you from?
It's the deflection.
Yeah, hi, Natalie. It's Craig. How you doing? You hear me, Natalie?
Yes, I can.
Yeah. No, as far as I know, with the diversion deflection, we're not having any of the, they don't have any program income. But everything else so far for your grant, at least the paperwork has been properly filled out. It's just that the one caveat that I was trying to make to everybody was about the last form for the closeout, that program income form just being only needed to be filled out as part of the closeout, because there's, like I said, 4 quarterlies, or depending on how many, I should say, how many quarters depending on when the period of performance covers. But there's always going to be one extra, and that's always going to be the closeout PFR.
Oh, okay. Thank you.
No problem, Natalie.
Yeah, and to that point, it is important to continue to fill out even a 0 on your quarterly report, the form that we showed you for income received and expended for every quarter.
Okay, thanks.
This one right here. So this is what we're talking about with the cumulative totals. That needs to be sent in. And then even if you don't have program income at your closeout, on the next tab, we need to have this filled out as well. And we need this form back because of especially the ICJIA use only section. We need that, and we need your signatures on that page as well. Some of my grantees did not send that in with their closeout because it was zeroed for their income, but we still need that.
Thank you.
You're welcome.
At this time, does anybody else have any questions for us? This recording will be up. I'm not sure how long it'll take our IT people to put the recording up.
But if people from your fiscal team weren't able to attend, we'll send a link to the recorded presentation to you.
Okay, if everybody doesn't have any questions, that concludes our program, aka Project Income webinar. Thank you for participating.
Bye.
Thank you.
Thank you.
Thank you.